Nigeria Stock Exchange, in collaboration with Bloomberg Markets, hosted the 2017 CEO Roundtable, focusing on the theme Innovating Out of Nigeria's Recession, exploring new paradigms for Nigeria's economic growth. Giving the opening remarks, the CEO of the exchange, Mr. Oscar Onyema, shared the essence of the roundtable.
The idea is that Bloomberg, given its global reach and its knowledge of worldwide trends, brings insights which, when paired with our domestic insights, will provide Nigerian businesses and policymakers with requisite knowledge to properly anticipate trends that will affect the Nigerian economy and position us to extract value. Our collaboration with Bloomberg to hold a yearly CEO Roundtable was born out of the need to bring leaders from various sectors of the economy to discuss and proffer solutions to pertinent issues affecting their sectors and examine global trends applicable to them. The Nigerian Stock Exchange continues to position itself not only to be a credible platform for raising capital, but to be a hub for innovative and creative ideas. For example, we've introduced a few initiatives such as the green bonds and federal government savings bonds into the market. We have automated the mechanism for trading rights issues on the exchange and continue to work towards the launch of exchange-traded derivatives.
Dr. Doyin Salami, a notable Nigerian economist, in his economic roundup, gave insight into the critical issues that need to be addressed in the economic space.
No matter how the economy, how the global environment changes, even into our favor, unless we are in a position where our labor force is actually fit for purpose, where our labor force is actually productive, then we will not find that our people will be part of any economic growth. And yet, for me, it's important that Nigeria does the following, or Nigeria achieves the following: growth, sustainable, sustained, but at the heart of it, inclusive. Growth, but it must be sustained, it must be sustainable, but at the heart of it, it must be inclusive.
In her keynote presentation on Nigeria's growth narrative, Finance Minister Mrs. Kemi Adelsun assured stakeholders that the government was resolute and unwavering in driving its revenue base to put the nation to the path of growth.
Our low tax to GDP ratio compares negatively with our other countries. Ghana is at 16%. South Africa is at 27%. The OECD average is 34%. So if we want to grow, we must address this issue and do so aggressively. And to do so, we will have to step on some big toes. And we will need to step on them hard. But we really have no choice. For the size of government we have, for the size of country we have, for the needs we have, government revenue is simply too low. Fairness demands that those who have more must carry their fair share of the tax burden. And so to this end, for the last 15 months, we have engaged in a huge data gathering exercise. We've engaged one of the world's leading global investigation agencies, and we have traced funds that originated in Nigeria to all parts of the world. The illicit flow of funds out of Nigeria harms our nation. It deprives us of essential funds and those same funds are then used to finance development in other nations. This must stop. As a government, we recognise that bringing up the issue of tax will automatically bring up the issue of service delivery and good governance, and we welcome that dialogue because it is an important part of the social contract that any taxpayer has the right to demand. In that regard, you have the full assurance that the President Muhammadu Buhari-led administration is committed to best value in expenditure of government monies, eradicating corruption and driving Nigeria's growth. More efficient revenue mobilization and blocking leakages is also an important financing strategy. And I'm sure you're aware of the controversies about the amount of money that we're using to service our debt at the moment. The solution is revenue. If we have more revenue, we will borrow less. If we have more revenue, our debt service to revenue ratio will improve. So the solution to the problem is not to reduce our debt. At this point in time, we have no choice. We must borrow to fund our infrastructure. The solution to the problem is to increase our revenue, and that we are doing. A growing economy, focusing on the areas where we have comparative advantage with a strong focus on infrastructure and an improved ease of doing business is a very clear recipe for growth, profit, and progress. And so as I begin to close, I will end where I started. May your road be rough. Our road has been rough, but I believe that as a nation, we have learned our lessons well. Nigerians are extremely fast learners. We know what we need to do to get this economy moving. We know the potential we have. It's really now time for us to act. Nigeria is doing more with less, and we will continue to do so. Growth is gradually returning. Investor confidence, I'm happy to see, is reawakening. And that confidence is based on an economic blueprint, which, if we follow doggedly, will take us from that rough road onto a path of sustainable growth.
Mr. Oscar Yema speaks further on the roundtable and policies in place to attract private investments.
I think that co-investment is the way to go. You get your dollars or your naira to go a lot further. And so mapping out the critical projects that are going to be catalytic in nature and getting other co-investors, both from development partners and the private sector, probably would drive the growth. We note that corporate governance is important, transparency and accountability, and we think that the stock exchange gives you that kind of platform that imposes those kinds of disciplines. So having a number of these projects financed through the capital markets, financed from an equity perspective, will also be something that we would be very much in support of. You know that policy shifted in the last 5 to 6 weeks around accessibility of FX for investors and exporters, and that has made it attractive for us to see the kind of inflows that we're seeing. The equity market is a forward indicator of economic activities. And so what you're seeing in the equity markets is really an indicator. People are buying on the belief that the economy is going to turn positive and that we're going to begin to see growth. And what we need to understand is that both foreign and domestic investors want the same thing. You invest money, you want to make money out of it. And you want to be able to access that money when you've made it. And so really, in order to make the investments sustainable, even through downturns, we have to be consistent with policy, and we have to create policies that facilitate those kinds of transactions, allowing market forces to really determine prices, price discovery, and the allocation of resources. The final thing I want to say is, if we want to make sure that foreign portfolio investors continue to stay invested through downturns in an environment, in a global environment where capital is highly fungible, people can easily move from country to country, we have to make sure that it is easy to do business in Nigeria. We have to make sure that we are highly competitive in our industries, in the returns that we provide for investors, both domestic and foreign. And finally, we need to make sure that the buffers are built in, so that in situations of high returns and high growth rates, that we're creating solid buffers, so that when you go through down cycles, it is not, the shock is highly moderated, and therefore easier for investors to go through.
With the challenges of unemployment and productivity in the country, a strategic public-private partnership framework from the government becomes imperative to attract private investments that will stimulate the economy.